What is going on, everybody? Welcome back to Bonafide Investing, where we talk all things high yield investing, as well as futures, options, and really just investment goals in general. If you're new to the channel, welcome. I want to give a little bit of background on Bonafide Investing and what we're doing here. For about the past year and a half, I've been experimenting with high yield strategies with the hopes to, number one, pay all my bills, and number two, pay down and maintain the margin across the portfolio. I'll call it risked about 25% of my net worth into this strategy. And so far, so good. It is so far accomplishing the goals that I've, set out to achieve. But again, I want to be mindful of risk first and foremost and return second. So please hit like and subscribe if you like what we're doing here. Anything discussed here is never financial advice, not now, not ever. So please do your own due diligence before, making any investment decisions of your own. Wanted to just real quickly talk about, there's actually a comment that came through and it gave me an idea to, it's kind of a good reminder that you always want to check your margin maintenance each and every day. Something I haven't talked about yet, I've been meaning to, something that I wanted to put out in some earlier videos, but want to talk about it now. One of the reasons I came over to Robinhood, brought some money over from other accounts, things like that, is that their margin interest is hard to beat. Ever since Robinhood started allowing closed-end funds along with ETFs again, it's been really hard to beat. Now, I'm not the biggest fan of Robinhood's tools per se. Some of you might be, but at the end of the day, I think you get the most bang for your buck when it comes to a strategy like this, a high-yield strategy like this. Even a growth strategy, right? We've talked about high yield versus growth. There's pros and cons to both, but always be mindful of your maintenance. And the reason for it, I've talked about it before, but I spent years as a financial advisor, and a lot of investors, including me, up until a few years ago, maintenance requirements can be changed at any time. Okay, so what does that mean? These numbers, okay, this maintenance ratio you see, for example, I've got 30% maintenance ratio on WPay. All of my long puts and calls are always going to be 100%. That's given. But again, it's a leveraged bet anyways. So I don't mind when you go long calls and puts. But you always want to watch these. Robinhood, without announcing it, can change these maintenance ratios at any time. Okay, so keep that in mind as you go. I like the way Robinhood lays it out. The one thing I don't like about Robinhood is the P&L, because they don't include distributions. So you're always going to look like you're at a loss in a high yield strategy. So again, you're going to have to add back in the distributions with whatever your positions are, either up or down, to get an accurate reflection of your true return. So in a high yield strategy, you're going to see your P&L probably at a minus whatever, just because, like I said, they're not going to do it. But other than that, they lay it down pretty nicely. You can see the market value of your investment, the percent of total required, right, for that investment. So what's that margin requirement going to be? And then what's your ratio, right? So it's really straightforward. They do a really good job. But like any other broker, whether you're at Robinhood, E-Trade, Schwab, wherever you might be, you got to be mindful of these maintenance ratios, okay? So I like 25 to 30%. I think all of my holdings, my ETFs and closed-end funds, are 25 to 30%. And like I said earlier, the 100% are going to be on your long calls and puts. That is what it is. I don't think there's any broker out there where that's different. So just be very mindful of that. And the other thing I want to talk about too, there's been some confusion, I think, and that's my bad. I want to clear that up. So when it comes to total portfolio value, okay, the 462, 237.05, that's what I've put in. That's my capital. Okay. Margin used is what's tacked onto that. Okay. So if you look at it here, the, portfolio value is this based on my own capital. You got to add the 115,198.83 to get the total value. Okay. So just to do some quick, back of the envelope math here, that's about about 577, 578, right in that range. Okay, would be the total invested using capital plus margin. Okay. Margin is debt. Don't forget that. Margin is good debt, in my opinion, if used wisely and responsibly. I'd love to use more margin. I'm using currently just under 20% of my available margin. I like to stay in the 10 to 30% range. But the reason I'm using far less is because I find that there's little to no value in these markets, right? I don't think we're necessarily in an everything bubble. I think there's some value maybe in energy and oil. That's why I'm speculating big. As a matter of fact, I did buy another Leaps call on XLE today just to get a little bit more diversification around Exxon. Yes, Exxon is one of its holdings, but getting some more exposure to maybe Chevron, ConocoPhillips, what have you. So there's not a lot of value. So I really don't see a reason to use a lot of margin at this time, especially when the portfolio is doing what it's supposed to do. Now, the game plan is if and when this market crash comes, and I think one is coming, I'm going to exercise the Q puts, the SPY puts, and I will deploy that back into areas of value, potentially some of it, most of it, or even all of it back into this strategy as well, which I think those will make up for a lot of the income, right, I would potentially lose from asset prices falling. So that's the plan there. Again, the message just here is watch your margin maintenance ratios daily. Okay, look at those daily. ULTY is a good example. When they did a reverse split 10 for 1, or I should say 1 for 10, Robinhood took their margin maintenance ratio from 25% to 70%, and they've just recently lowered it back to 25%. So you got to watch things like that. Again, they don't have to announce it. It can really mess up your margin buffer if you're not careful. Margin buffer is another metric that I watch closely. I like to stay above 50%. And hey, 63.17%, I'm pretty pumped on. That's a good spot, in my opinion, for me to be. So again, these maintenance ratios can really influence, how your margin currently stands, the probabilities of you getting margin called. And that's why you really want to pay attention. Remember, if a margin call comes, you oftentimes don't get to pick what they're going to sell. And you usually get a 2 or 3 day notice that they're going to start selling. So my I bonds, the good news is my I bonds far outweigh my margin used. So I could sell I bonds, have that liquid in a day. And what's nice about Robinhood is when you deposit funds into Robinhood, they credit you that same day. So that's really nice. I think it might be for all investors. It might be if you're established with them, maybe you have you might need maybe a month or two track record of sound deposits. I don't know. So check with them first. But I know that when you make a deposit, they credit it to you that day. So be mindful of these things, right? I think what happens is, greed can set in, and I've got all this, money available to me that is on margin and it doesn't show up on a credit check. And, it's kind of revolving. So you're only paying the interest. It's not like a car payment debt, which, in my mind is bad debt. It's not like, I think it's even better debt than mortgage debt. So just be careful, be mindful of these pieces of your margin if you are using margin. And please don't use margin until you have a good understanding of what margin is and the pros and cons of margin. Okay. So just wanted to make a quick video around that. Love to hear comments, questions, any feedback you have. Again, please hit like and subscribe to support the channel. Hope you got something from this video and have a great day.